Good day, welcome to your next EXP Express recording. Our next section is exempt income, and we have to bear in mind that exempt income means anything that will reduce our liability to pay income tax. This is what the calculation looks like. It involves an exemption. It's gross income less exempt income will give you income. For non-residents, we are just dealing with non-residents now. There are three different exemptions. The first one is an interest and royalties exemption accruing to non-residents. The next is any interest paid by way of an annuity is exempt, and any amount that has been subject to non-residents' royalties or sports person and entertainers withholding tax is exempt. For residents, we go to a basic interest and dividend exemption. If an individual is over the age of 65, they will be allowed an exemption on interest of 33,000 Rand for the year. If the individual is below the age of 65, they are allowed an exemption of 22,800. However, should this very same individual earn foreign interest and dividends, that is exempt to a limit of 3,700 Rand, but that exemption is included in, if the person is below the age of 65, the 22,800. So if they earn dividends of foreign dividends and interest of 3,000 Rand, that's below the limit. So you will take the 22,800, you will reduce that by 3,000 Rand before you do the local interest, and your local interest exemption will be limited to 19,800. Please remember that interest exemption is only available to individuals, not corporate entities, not trusts, not anyone else. The exemption of South African dividends, section 10(1)(k). All South African dividends are exempt except dividends distributed by a company, the shares of which are property shares. If it is distributed by a portfolio of any collective investment scheme, where the dividends form part of any consideration received in respect of the sale of shares to a company, in respect of a share buyback scheme, any dividends received in respect of a restricted equity instrument, any dividends received in consequence of a cession, any dividends received in respect of borrowed shares, and any foreign dividends and dividends paid by a headquarter company. Our next one deals with employees, and if you are expected to wear a uniform, which is a condition of your employment, it must be a special uniform. It will be exempt from tax if it is a clearly distinguishable uniform. It cannot be a white dress. It's got to be a white dress with red EXP all over it, or something equally ridiculous. It has to be a clown suit that you have to wear to work every day. But it will only be exempt if people can distinguish that this person belongs to the EXP group or to any other company. Relocation benefits, any expenses that may arise in consequence of the transfer of an employee, a new appointment, or the termination, the relocation benefits are exempt. A broad-based share employee scheme, these deal with qualifying equity shares in a broad-based employee share plan, and it is exempt from normal tax but limited by section 8B to a maximum of 50,000 Rand over a 5-year period. Section 10(1)(nd), this section exempts the receipt or accrual of an amount which constitutes an equity instrument as contemplated in section 8C. A acquired by that person, or consideration for the disposal of an equity instrument which has not vested at the time of acquisition or disposal. The stop loss provision for share incentive schemes, which is section 10(1) NE. Certain amounts received by or accrued to employees under a share incentive plan are exempt. Interesting one is section 10(1) ship crews and persons outside the Republic. This exempts any remuneration derived by an officer or crew member of a ship engaged in international transportation of passengers and goods if the taxpayer was outside the country for a period of 183 days in aggregate. That means it must not be one stretch of 183 days. It can be split up, but in total it must add up to 183 days, or at least 183 days. Section 10(1)P exempts any amount received by or accrued to a person who is not a resident for services rendered by him outside the Republic for or on behalf of any qualifying employer or provincial sphere of government or municipality in the Republic. 10(1)Q study loans, bona fide scholarships granted to enable or assist any person to study at a recognized educational or research institute is exempt. Unemployment benefits, any benefit paid by the Unemployment Insurance Contribution Act is exempt in the hands of the recipient. Relative to pensions, you've got section 10(1)G, which exempts war pensions or compensation for diseases contracted by persons employed in mining operation, exempts disability pensions, and exempts compensation paid in terms of the Workmen's Compensation Act. Section 10(1)GC exempts from normal tax any amount received or accrued to any resident under a social security system of another country, and any amount received to a resident from a source outside the Republic which is not deemed to be from a source within the Republic, in consideration for past employment. Any funeral benefit payable in terms of the Special Pensions Act is exempt, and any amount awarded to a person by a minor beneficiary fund is exempt from tax. Public benefit organizations, receipts and accruals derived from any public benefit activity, and receipts and accruals from a public benefit organization are exempt to the extent that they are not business or trading activities, and they are from certain integral, occasional or approved business or trading activities. Our last one in this section is section 10A, which is annuities. Annuities are divided into a capital portion and a revenue portion. The revenue portion is included in income, and the taxable portion and the capital portion is exempt. And this is calculated by Y is equal to A over B multiplied by C, where Y is your exempt capital amount, A is your lump sum insured by the insurer, B is the total expected returns of all annuities in terms of the contract, and C is the amount of the annuity. If you terminate this annuity, you will calculate an exempt portion as X is equal to A minus D, where X is the exempt portion, A the original amount paid, and D the total of previously exempt portions received under this contract. And that is it for exempt income. It's not a very long section, but please remember it's important because it reduces your gross income. Thank you, and I'll see you at the next